Welcome to this explainer. I am absolutely thrilled to have you here today because we're going to unpack something massive. Think for a second about a country's government. It's really this gigantic, interconnected economic engine. It builds our roads, runs our public schools, protects the country, and basically just keeps society running smoothly. But all of those massive projects and essential services, they don't just appear out of thin air. They require a staggering, steady flow of cash. So today, we're taking a structured journey right into the mechanics of government revenue, and we're going to see exactly where all that money actually comes from.
So it all really boils down to one core question. How does a government actually pay for society? Well, unlike a normal business that just relies on selling a product, a government has entirely unique, sovereign powers to generate money. Think of it like this. Money is constantly looping through our economy, and right there, dead in the center, sits the government. It acts like a giant pump. It collects cash from individual households and corporate firms and then pumps that money right back out into the economy through public purchases and social benefits. But how exactly does it extract that cash to begin with?
To figure that out, we'll be looking at four main fuel lines. First, taxation, the heavy lifter. Second, fees, fines, and services. Third, borrowing, which is selling debt. Fourth, monetary mechanics. And finally, we'll wrap up with the final balancing act.
All right, let's dive right into Section 1, Taxation, the heavy lifter.
Taxes are absolutely the bedrock of this whole system. They do the vast majority of the work. In modern economies, taxes usually make up about 80 to 90% of all government revenue. You can really think of taxes like a mandatory subscription fee for living in a civilized society. It's basically your baseline cost for having paved roads, emergency services, and a functioning legal system. But as you probably know, not all taxes are collected the same way.
Let's compare two of the biggest slices of that tax pie, individual income tax and payroll taxes. Now, individual income tax is levied directly on what you earn, whether that's your wages, your investments, you name it. Most nations use a progressive system with tax brackets. That simply means the more you earn, the higher the rate is on your next dollar. And that cash goes into a giant general pool to fund everything from national defense to infrastructure. Now contrast that with payroll taxes, which are also known as social insurance. These come right out of your paycheck too, but they are strictly earmarked. They are locked away for very specific long-term social programs, like retirement pensions, elderly health care, and unemployment insurance. And usually, the cool thing here is that the cost of this tax is split right down the middle between you and your employer.
But hey, it's not just us everyday folks paying up. Corporations are legal entities, and they earn money too. The corporate income tax targets a company's net profit. That's the total money they made minus their operating expenses, like rent and salaries. Now, setting this tax rate, that is a very delicate balancing act for the government. Think about it. If lawmakers set the rate too high, large companies might literally just pack up and move their headquarters to a country with friendlier rates. But if they set it too low, the government is leaving massive revenue from highly profitable industries on the table. It is a constant tug of war.
Okay, so instead of just taxing what we earn, governments also tax what we spend. We call these consumption taxes, and they generally take three forms. First up is your standard sales tax. That's just a flat percentage added right at the cash register, and it usually funds state or local projects. Second is the value-added tax, or VAT. And third, we have excise taxes, which are often called sin taxes. These are incredibly high taxes slapped onto specific items like cigarettes, alcohol, or gasoline. The goal here is twofold. The government either uses the revenue to fix the damage caused by the product, like using gas taxes to fill potholes and fix highways, or they just use it as a financial nudge to make you rethink buying that extra pack of cigarettes.
Now, what's truly fascinating about the value-added tax, or VAT, is how it works completely behind the scenes. Unlike a simple sales tax that just hits you at the end of your shopping trip, a VAT is levied at every single stage of a product's creation. So from the moment the raw materials are sold to the manufacturer to the distributor, a fraction of the tax is being collected incrementally. By the time you actually buy it at the store, you, the final consumer, are essentially footing the whole bill. But the government? They've been safely collecting their revenue all along the supply chain.
To finish up our tax section, we've got taxes on assets and movement. Property taxes are based on the assessed value of your home or your land. These are absolutely crucial because they almost exclusively fund your local police, fire departments, and public schools. Then you have estate or inheritance taxes, though those usually only kick in at very, very high wealth thresholds. Finally, let's zoom out to the international level: customs duties and tariffs. Whenever goods cross international borders, the government charges a fee.
But tariffs aren't just there to raise cash. They act as powerful economic shields. By heavily taxing imported goods, foreign products become way more expensive, which encourages you to buy locally made alternatives instead.
Let's move on to our next fuel line. Section 2. Fees, fines, and services.
Let's look at the simple, beautiful logic of user fees. Not every government service is used by every single person, right? So if you specifically need a passport to travel, or you choose to drive across a specific toll bridge, or you want to hike in a national park, you pay a user fee directly. The concept is highly efficient. The citizen who directly uses the specific infrastructure pays to maintain it. And because the user pays, the general taxpayer pool is saved from footing the bill for a service they might never even use.
The government also collects revenue through penalties and enterprise. When laws get broken, administrative fines are issued. So, if you get a speeding ticket or a huge factory violates pollution laws, they pay a penalty. Now, the main goal there is deterrence, obviously, to stop the bad behavior. But it handily creates a secondary revenue stream that helps fund the court systems. On top of that, many nations run state-owned enterprises, or SOEs. Think of your National Postal Service, public transit networks, or state-run energy companies. When these government-owned commercial businesses turn a profit, those earnings flow straight back into the national treasury.
Moving right along to Section 3. Borrowing, selling debt.
All right, so what happens when a government inevitably wants to spend more money than it brings in from all those taxes and fees we just talked about? Well, it turns to global financial markets and issues government bonds. These are essentially official IOUs. An investor, which could literally be you, a massive global bank, or even a foreign country, gives the government cash today. In exchange, the government promises to pay back the full amount after a set period, maybe 10 or 30 years down the road, plus a fixed amount of interest along the way. Now, you might be wondering, why would anyone buy this? Because sovereign bonds from stable nations are considered the safest investments on Earth. The government literally has the power to tax its citizens and print money, meaning they are pretty much guaranteed to pay you back.
Which perfectly sets up Section 4, monetary mechanics. This brings us to what I like to call the government's ultimate cheat code, seigniorage. It's the pure profit a government makes simply by issuing currency. Seriously, think about the math here. It's absolutely mind-bending. It only costs a few cents worth of paper and ink to physically print a $100 bill. But the second the government puts that bill into circulation, it has the purchasing power of $100. The difference between the actual face value of the money and that tiny cost it took to manufacture it, that is pure profit for the government. And it goes way beyond just the printing press. A government central bank like the Federal Reserve in the US holds massive amounts of financial assets and foreign currencies. You can basically think of the central bank as an ultra-wealthy investor. Throughout the year, it earns significant interest on these vast investments. Once the central bank covers its own operational costs, the law actually requires it to pass its excess profits right back to the main government treasury. These are known as central bank remittances, and it's a quiet but incredibly powerful inflow of cash.
And finally, let's bring it all together in Section 5, the final balancing act.
So, when you add up every single tax, fee, fine, and central bank remittance we've covered, you get the government's total income. Pit that against their massive spending budget, and you get the moment of truth. If spending is greater than revenue, boom, we have a budget deficit. The government has to issue more bonds to borrow the cash difference. But if revenue is somehow greater than spending, which is a much rarer occurrence, we have a budget surplus. This means the government actually has extra cash on hand to pay down old debt or save for future crises. This right here represents the ultimate reality check for any nation.
As we wrap up this explainer, I really want to leave you with a question to ponder based on everything we've looked at today. Are your daily spending habits the true fuel running this massive economic engine? Because when you strip away all the complex terminology and the economics jargon, a government's revenue is directly tied to the productivity, the spending habits, and the general economic health of you, the citizen. Every single time you earn a paycheck, or buy groceries, or pay a toll on the highway, you are the one keeping this massive machine running. Thanks so much for learning with me today, and I really hope this provided a clear, structured map of exactly how your world gets funded.